It is good to be back. Welcome to another edition of the Forex Technical Market Update for October 26, 2015. And we have been on a mini break over the last 2 weeks. We're attending to some investment conferences and investment activities that we had to do at the normal time we do the update, so we didn't or I didn't have the time to actually do the updates and everything involved. But now I have the time in the mornings to deal with the updates, and it is definitely good to be back. Since I have left, let me just update you on what has happened. I'm sure you have all seen what has happened, but let me just give you my outlook as to what has happened. We have the first week that I was away, we had a doji candle, and the second week we had a huge move up in the US dollar. But look at where the move stopped. The move stopped exactly at the triangular upper resistance for this triangle. What we're looking to see is that, or what we're looking for is to see if the market can break above this triangle and close above this triangle, especially on the weekly time frame. If we do get a close above this triangle, and the market closes above the 98.50 level, that would be fairly bullish for the US dollar, and we could get a test of the $100 level on the index, and we could see a further up move in the market if we get a break. Note that this consolidation has lasted a number of months, and the break could be fairly significant if it does occur. We have seen situations like this before where a market appears to have gone to sleep, and it's when folks think that the market is asleep, that's when the market breaks out and breaks out violently. So you need to get on board. You need to prepare yourself, because this is how money is made in the market, especially by swing trading and position trading. You prepare yourself for the moves that occur in the market. Now, the support in the market is currently at the 93 level, because what could happen is that the market could reject this level, come down, and close below this 93 level. If that occurs also, we could see a fairly sudden drop in the value of the dollar. So whichever direction, as traders, we don't really care which direction the market goes, but we just have to be prepared for whatever direction. Taking a look at the euro, we see that this is the uptrend line that has been broken on the euro, and this could be evidence that the market wants to move to the downside. This trend line has been tested. Let's call this the first test, because this is the starting point. Let's say this is the first test, the second test, the third test, and then the market closed below this trend line here, which is very key and very important technically. So if we see, what we could see is the market retest the trend line and then collapse to the downside. First area of support will be at this 108 region, and also the 104, 104.50. If we do close below those levels, that will be fairly bearish for this market, and we could see a pretty strong move down in the value of the euro. And I was just over in Europe a while ago, and it's good when you can change your dollars and get more euros for your dollar. But we could see a weakening euro over the next couple of weeks if that scenario that I just described was to occur. On the flip side, resistance is up at this 117 region, and if the market turns around and closes above 117, we could see a further appreciation of the value of the euro. Again, whichever direction it breaks, we're not really concerned. We're just looking to make some money. That's really why we're trading. Japanese yen, broke out of its triangle, is of its triangular consolidation pattern, and the market is retesting. This triangle is actually not drawn that well from the top here, above the top. Now the market is retesting the breakout point. If this test is successful and we get a further close above this 122 region, that could signify some gains in the US dollar versus the Japanese yen. If the test fails and we head back down and close below 116, the yen could appreciate versus the US dollar. Taking a look at the British pound, we did have a break of a trend line here. Market broke, came right back up, tested the trend line and failed at this point and headed back to the downside. Support in the British pound is at 151. We could see this market continue below and test the 151 and 150 and 148 areas. Our resistance is up at 156, the swing high that we have here. The resistance, and also up at this 158 level is resistance also with the British pound. But I would say, all in all, the US dollar has a advantage. It's moving to the it has a slight advantage. Now things could turn around, but if I'm more favoring the strong dollar scenario at this point in time, and based on the evidence I see in front of me. Taking a look at the Canadian dollar, we see that the market stalled out near this 134 region. It went down and tested the 38% retracement level at 128.71 and is now increasing and is heading upwards steadily. Resistance is up at 132 and support is down at 126.90 for the Canadian dollar. All in all, as I said, and over the break, after the break, what happened? We had a massive move up in the value of the US dollar, and this could definitely be the start of fireworks in the markets, because as I said before, this last quarter of the year is normally the most active. Last quarter and the first quarter of the year, those two periods of time can be very active with the Forex market. So if you want to get on board with these markets, now is the perfect time to do so, because in a couple of months and a couple of weeks, what we'll be talking about is the trends that have emerged, and you have two options essentially: to get on board or to watch the trends fly right by you. So if you'd like to get on board the trends and would like to follow what we're doing, our signals can be sent directly to your trading account. You can click on the link below this video to get more information on how to get signed up with the signals. And it is definitely good to be back. Yes, I received many emails over the last 2 weeks of when we're going to start back the updates, and I appreciate everyone's support. And it's good to know that I have an audience that is engaged and actually looks forward to what I have to say about the Forex markets, and hopefully you're learning about the markets. So to get involved with the signals, click on the link below this video, and it's good to be back. Thank you very much.